Hello, everyone. Great to be back with you today for our webinar series to talk about cash planning and how much money you should have in cash as a court reporter and really as a business owner to make sure that you're setting yourself up for success. Again, I'm Brandon Sussman, owner and founder of Traction Wealth Management, and specializing in helping court reporters and coming from a court reporting background through my mother, who was a reporter and agency owner. Let's get started on the presentation today. Should be a nice and easy one. So let's get it going. All right. So number one, why did I pick this topic of planning for cash and thinking about it for court reporters? Number one is that you have irregular income. So there's a bit more of an emphasis on having cash in your accounts. I think for others that are in like a W-2 salaried position, especially if you're married and both you and your spouse have a salaried position, that makes things pretty easy. Odds are that you'll both be working or one of you will be working at all times where you'll have some sort of income coming in that's going to be consistent. Also, a lot of like layoffs that have happened recently, there's usually pretty good benefits packages for that to give you some income while you're looking for your next venture. But as a court reporter, you got to do everything on your own and you got to plan 100% on your own. So the same thing comes with cash. So being self-employed is definitely something we want to think about. And then also you do have other expenses and business expenses as well. So something that others may not deal with is not only do you have to plan for your personal expenses like everybody else, but then you also have to think about business expenses that could come up as well and how to navigate that part of your planning and your cash flow also. So I have here is like the 2-account system, and this is pretty straightforward, but it's something that a lot of people even haven't done yet, which is that we need to separate our accounts into business accounts and personal accounts. And the main reason we want to do this is really when it comes time for taxes, is it just makes your life a lot easier to separate your expenses and revenue and everything to make it easy for your CPA or for yourself to sort through those expenses and see what deductions you're going to get for the year and keep track of everything. So we want to make sure that you're on top of it to really just make it nice and easy to get all that stuff done. Also, as court reporters, a lot of you are S Corp. And if you have S Corp status, it's even more important that you have these separate accounts to really just separate what's business money and what's personal money. And then also when you need to pay yourself paychecks through a salary and a payroll system, you need to have the money that you're taking or the account that you're taking the money from, and then the account that you're putting the money into as the employee of your business. So it's going to make it a lot easier to be able to do that. So what is the magic numbers that you need to have here as your safety net? I would go on a higher side than what I would typically recommend for others when it comes to emergency funds. And it really doesn't matter here as like business emergency fund or personal. I think combined between the 2 accounts, you should be looking at a year of expenses for both personal and business combined. So essentially you could be not working for a year and have guaranteed income to live off of for a 1-year period to cover any expenses that can come up. Typically, if we're out longer than a year, usually it's something like a disability or an injury that is putting you out of work. And hopefully at that point, you're getting some type of like disability benefit through the state, or you have a disability insurance policy in place, but you're doing something that's going to bring you in some cash flow on top of these assets that you're going to be spending down. Outside of this, you are going to have a backup plan of like your 401ks, your retirement accounts. Typically, there's penalties for accessing those accounts, but it is your fail-safe if you need it. But for me, I like these numbers of 3 to 6 months of expenses in the business account, and then maybe another 3 to 6 or 6 to 9, depending on how much you put in the business to have in the personal. But again, my big number here is that it's 1 year of expenses for both personal and business expenses that's fully covered. So you can go a year without working and be okay. Now, oftentimes, actually, with court reporters, is I see the complete opposite of this, which is that they have even more than that sitting in cash it's not really a problem of building an emergency fund. It's more a problem of building too much of an emergency fund and having too much sitting in cash for expenses. And the main reason that I see that is that usually court reporters are so busy and they have so much stuff going on that they don't necessarily have time to sit down and figure out what's their investment plan going to be, how much they're going to sock away for retirement. And so they end up not doing anything and just keep building money in cash to a point where we're getting closer to a year and a half or 2 years worth of expenses just sitting in cash because you don't know what to do with it. If that's not you, though, and you are focused on building cash right now, I would try and earmark like 20 to 30% of each paycheck going toward building an emergency fund. My usual goal for clients is that they're saving 20 to 25% of their gross income, or for court reporters of their gross profits, their revenue after expenses for the business is being saved. And this is a great place to start. Once these buckets are done, then you get to focus on the investments and everything else. But we can't skip over this and go straight to the investments, because what happens if we do have this disabling event? If you only built up 3 months of expenses before you started focusing on retirement, now we're going to have to go access those retirement accounts, and all that hard work that we did originally is wiped out. So it's pointless. So we need to make sure we have this foundational piece in place. Also, another reason why we want to build cash and maybe even get above that 1 year expense mark is for taxes. So I would not really consider this as part of like your cash that you have for your emergency funds, but just an account that could be separate that gets built up. Me personally, I do like to have it separate. So I have a business savings account, and then I have a business savings for taxes. And that just helps me to know, what do I have in savings and what's my tax money that I'm just building up and basically liquidating every quarter as I keep paying into my tax account. I would recommend at least 25% of your income being set aside for taxes. For some of you, this may seem low. For others, it may seem high. This is just a good earmark to start with. If it's your first year reporting or you're early in your career, you may want to set aside an extra 10%, just because you're not sure what it's going to look like, what business expenses you're going to get to write off, and how it's all going to work out. So we'd rather be on the high side and have some extra money than not be saving enough and be in a tough situation. So we want to build up the 25 to 35% of your income for taxes. And you are going to want to do your quarterly payments as well. Next one coming up is September 15th. And it's important to just stay on top of those, just so we don't have any penalties or surprises later on. I would always just do the minimum of what you need to do for your quarterly payments based on what your CPA tells you, or what QuickBooks or Intuit tells you, TurboTax tells you for how much you need to set aside. This extra 10% buffer, I would probably leave that for yourself in a savings account. And you're only going to use that money if you need it when you actually file. And that way it's still in your hands and you still have control over it. You're not giving it to the government and waiting to potentially get it back in a few months. So it just keeps the ball in your court to have the money with you. So where should you keep this cash that you build? There's a couple different places that you can put it. Number one is going to be your high yield savings account. This is something I highly recommend that everyone looks at getting set up, because right now interest rates are historically high, where you can earn 4 to 5% with your money that's just sitting in cash. And that's a pretty good return to really have no risk and just have it guaranteed to grow. Typically, the way high yield savings accounts work is that they'll just limit how much, like how many times you can take money out. So maybe you can only take money out, like mine is 6 times a month, which I'm not taking money out of my savings account 6 times a month anyways. I've never even come close to that number. So it's really no big deal, and I can just save as much as I want into this plan. Outside of that, you are going to want your checking account for both your personal and your business. That's going to be more your money movement, and that could be 1 to 2 months of expenses there. But again, we don't want too much. You want that account to get pretty low each month and then get replenished, and one that helps you keep tabs on it. If you always want 1,000 at the end of the month, and then all of a sudden 1 month you're down to $300, then you're like, okay, I overspent this month and I need to try and cut back next month and get back to 1,000 at the end of the month. So it gives you like a baseline that you could work off of for your monthly cash flow. But the other reason is just if we can have our money earning in a high yield savings, we'd rather do that instead. The only thing to keep in mind with this high yield savings account is that the 4 to 5% interest that you earn, it does count as ordinary income. So that's the only downside, is that is going to be income and you will pay income taxes on it this year. So it feels like 4 or 5%, but it's really closer to 2.5 to 3.5% because of the taxes that you're going to have to pay. But it's still, regardless, it's a lot better than like the 0.01% that you're getting in your checking account. We'll take it. So as far as some action items that you could take away from this presentation today, number one, if you haven't opened a business account yet, definitely need to make sure you do that. Number two is calculating what your emergency fund numbers are for yourself. So what are the numbers that you need in your personal and your business accounts? And I would focus on business first and then go to personal if you're behind. If you're ahead and you're like some of the other people I've met where you have way too much in cash, that opens up another can of worms of, okay, now that we've done this planning, what's next in our financial plan? Do we need a retirement account, increase our contributions, set up another investment account, pay down debt? That kind of opens up a lot more options to focus on after you've checked these boxes. Once you get those things done, you can look at setting up a high yield savings account. It doesn't really matter where you go. Some banks are going to offer 0.2, 0.4% better than other ones. At the end of the day, we're not talking that much money here of 0.5% or less difference in your interest rate. So I wouldn't go spending hours and hours trying to find the best rate possible. I would just pick one and get started, and that's most important. Typically, you're not going to find this at Chase or a Bank of America or a Wells Fargo. They typically don't do any type of high yield savings or money market accounts. So you're going to have to look for more smaller or regional banks to be able to do this. There's a lot of banks online that you can work with as well. So I would just Google top 5 high yield savings accounts that I could set up right now, review, do some research, and pick one of those banks and go from there. After that, I would set up automatic transfers. So what can we do every single month, no matter what, to focus on building this emergency fund and use that as your starting point? Of course, if you have a great month and you're making a lot of money, then do some extra contributions. But if you're not doing so hot, then at the very least, we know that we're doing that consistent monthly amount that you can stay on top of. And then ongoing, we want to just do a monthly review of your cash reserves. Once we do dial it in, are you building it up too much and focus on other areas of your planning? Are we staying on top of our taxes? Do we need to increase our tax withholdings? How are we doing on that? And really just make sure that everything's buttoned up here and that we stay organized. It can be easy to get it all organized when you're focused on it, but then if you start to neglect it, you'll notice that you just build all this money in your checking account because you're not putting it to savings when you're done with it, or just not being as diligent or on top of things as you were originally. So that was everything I had for today. Pretty easy one, just focusing on cash reserves. But although it's easy, it's definitely important. There's also some easy wins here, like setting up a high yield savings account. I've had clients that I work with for the first time, and our fee basically gets paid for just by getting their money out of a checking account into a high yield savings account and getting some interest on that money. So that's a nice, easy win that you can implement if you haven't done so yet. Other than that, that's everything for today, and I'll see you all next week.